December market report today, and more importantly, in my mind, I'm going to fill you in with a little boots on the ground happenings, otherwise known as my trench report. Let's get to it. The past 2 weeks, the local real estate market seems to be opening up. We have had a noticeable increase in our business. So what does that mean exactly, and how do we judge that? Just this past week, we got 4 offers accepted on our team and opened 4 new escrows. Chris and I got 3 offers accepted, and Scott got 1 offer accepted. Scott has another offer out on a new construction home that we should hear back about later today on that one. Mind you, all of these offers were accepted at under the asking price, ranging from $8,000 under asking to $24,000 under asking, just to give you an idea. We also take the temperature of the business based on how many of you folks are reaching out to us. We have had a noticeable uptick of new contacts as well as our client consultations. The first step when we're getting started with a new client is we schedule a Zoom or a phone call with us where we go over your individual situation and make a game plan. Some people call us and want to see properties like tomorrow. That's fine, and we can handle that between me and Chris and the team. However, more often our clients are making big moves, typically months in advance and often across country. We work together to figure out the smoothest way to make the transition. The process often involves a preliminary trip to our area where we like to meet with you, and we're often giving tours and helping you get familiar with the area and narrow down which neighborhoods you like. These calls and client tours are happening much more frequently than they were the past couple months when things slowed down a little bit. Also, other agents in our area as well as other states say that they are getting busy again too. Speaking of agents in other states, I have noticed that this particular agent friend of mine who happens to live in Denver, she has a YouTube channel as well. For whatever reason, our market, the Temecula Murrieta market, seems to follow her market, seems to lag it by about a month. And so in December, she started getting busy. I was a lot slower, and so I'm not surprised now that it's picking up in our area because for whatever reason, we're following the Denver market. I always caution, 1 month does not make a trend, and the same goes for the first 2 weeks of this year. I'll be very interested to see where the January numbers land. In the meantime, I'm going to be sharing the December numbers that are in the books. These numbers are not the greatest, and that's why I'm giving it some context. If you are considering jumping in as a buyer or seller, you really need to be on the cutting edge with a solid pulse on the market. Otherwise, you could end up paying more as a buyer or taking less than your home is worth as a seller. We know about other buyers overpaying and unknowingly bidding against themselves last year when the market shifted. Don't let this happen to you. So what else is driving strong sentiment right now? According to the Pour Over, which is one of my favorite sources for a summary of daily news sites, they say December jobs reports showed strong job growth, up 222,000 jobs. Low unemployment at 3.5%, and slow wage growth, 4.6% annually. Why, you might not be excited about slow wage growth. The Federal Reserve is. Fed Chairman Powell has long said he sees beefier and beefier paychecks as a core driver of inflation. This report revived hopes for a soft landing, aka combating inflation without tanking the economy, and gave the stock market its best day since November. So I agree, the economy seems to be taking this news pretty well, and the stock market, well, they say Wall Street is putting their party hats back on. Am I happy about the signs the market might be ramping back up again? I have mixed feelings about it. We love to be busy, of course, but I do not want the prices to increase like before, and I hate that affordability has been pushed to the limit. But this market has been rather enjoyable, in all honesty. My buyer clients do not need to rush and make quick decisions due to strict deadlines and multiple offers. We're getting good deals on the buy side. For properties that need some work or need some upgrades, the sellers understand that and they've been more flexible. For sellers that are priced right, it's not bad either. We did a small price reduction from $709,000 to $699,000 on one of my listings in Murrieta, and then we received multiple offers once we hit the sweet spot. In one of Redfin's latest articles is an example of what I am not happy about. They released a 2023 predictions video, and their prediction number 6 was that builders will focus on multifamily rentals. Builders will continue to pull back on constructing new homes next year, with year-over-year declines of roughly 25% in building permits and housing starts continuing into 2023. Builders will back off most from building single-family new homes. Construction of single-family homes surged during the pandemic, which means builders need to offload the homes they have on hand without adding more supply to limit their financial losses. They'll pull back dramatically in some markets like Phoenix and Dallas, where they built too many homes in anticipation of demand that's failing to materialize. Constructing rental units, including apartment buildings and multifamily houses, will make more financial sense for builders next year, as rental demand won't fall off as much. Rental building activity is likely to fall slightly in 2023, but not as much as construction of single-family homes. Some construction spending will shift to remodels, as many Americans who are hoping to move will instead opt to renovate in the face of high mortgage rates. This is a perfect example of what I think is not good for the average citizen in our country. I think that it is financially beneficial typically to own your home. The majority of people's net worth is in their home equity, and I think that it is very important for financial security to be a homeowner and not a renter when the numbers pencil out, which is most of the time. So I'm not happy to hear about there being more supply of rentals and less supply of single-family homes that are being built for sale. Okay, we're going to get to the December numbers. We're going to look at Murrieta, Menifee, Temecula as usual, still working on adding Winchester, and we're, as always, only looking at single-family homes to keep it simple. Okay, median sales price, starting with the city of Menifee. Month over month, median sales price has declined again from $552,000 to $539,000. That's a decrease of over $12,000. Year over year, we are down slightly. So that's that inflection point that I was talking about in my last video, where we have now declined over the price year over year. So that was kind of big news in the housing market that I think that they are going to be overplaying in the media. Moving on to Murrieta. Murrieta also declined month over month from $647,000 to $627,000. That's a decrease of $20,000 month over month. Year over year, we have a decrease as well, $14,500 decrease year over year. Temecula is the anomaly in this stat, in that it has increased actually $6,000 from $689,000 to $695,000. So we have a small increase. If you saw one of my last videos, I pulled numbers right at the end of December where we thought Temecula was going to be coming down slightly, but this happens a lot at the end of the month, even going into the beginning of the next month for a couple days. Some additional sales come in. Sometimes the agents are late in flipping them to sold, and that worked to the positive for Temecula. So we went from having a slight price decrease in Temecula to having a slight price increase. So year over year, totally flat. Look at that, $695. So Temecula equity for the year has been wiped out, basically. Moving on to number of closed sales, starting with Menifee. Month over month, we have 9 more closed sales, from 114 in November to 123 in December. Year over year, number of closed sales is down 108 homes. So that's down 46.8%. Moving on to Murrieta, number of closed sales is down. So we have a little bit of a mixed bag on this one. So number of closed sales in Murrieta is down by 11 homes, from 96 homes to 85 homes in December. Year over year, we have a pretty big decrease in closed sales, from 205 to just the 85. So that's a difference of 120 less closed sales year over year. Oh, Zoe. That was Zoe. She's our other problem. Chris just went to get her. Chris just went to go talk to our kids. We're filming on a Monday. School doesn't start for whatever reason, back from break on a Tuesday. We're trying to get this video filmed. That is working mom life. Moving on to Temecula is positive, so we've got Menifee and Temecula is increasing in the number of closed sales while Murrieta came down. So we're kind of bouncing all over the place, which is also why I wonder if we're leveling. When we start having these very similar cities, having, one's a little bit up, one's a little bit down, I kind of wonder if we're starting to level. Time will tell. Closed sales Temecula, month over month, it is it is up 21 homes. Year over year, it is down 83 homes. So year over year, we are down in closed sales 46.4%. Number of days on market, and I apologize if you can hear my kids. They're just not going to be quiet anymore. But Menifee, Murrieta, across the board, spoiler alert, it's up across all three cities. So number of median days on market in Menifee is up 5 days. Month over month, it's up 28 days year over year. So homes are taking a lot longer to sell. In Murrieta, we're just up 1 day, so that's fairly flat, but for month over month. But year over year, we are up 35 days, and so taking much longer to sell. And in Temecula, we're up 3 days. So that's just a slight increase month over month. And then year over year, it's up 29 days. So as I mentioned in my earlier commentary, our buyer clients are not having to rush as much. Homes are not flying off the market. They can take their time a little bit more, which is very nice on the buy side. And sellers just need to be prepared with their moving plans also, that it might take a little bit more time than it has been to sell. Last stat is number of listings. We're starting in Menifee. So number of listings for sale month over month is way down, and this is normal seasonality. So you had 429 in November. You have 118 less in December, so for 311. But year over year, the number of listings is up 73. So buyers are having more homes to choose from, which is also why they're able to take their time more, and why homes are taking longer to sell. Moving on to Murrieta, number of listings, month over month is also down about 100 homes, and year over year it is also up about 58 homes. So very similar trends across all three cities for this stat. Number of listings in Temecula is down 71 homes from 293 in November to 222 in December. And year over year, it's up just as the other two cities. This Temecula is up 57 homes year over year. So thank you guys so much for watching this market report. Let me know if you have any questions, and I will see you next week. Bye-bye.